Good morning, traders. Captain Jim James here with the Daily Brief. I'm just starting to get up this morning. I'm a little sore after this weekend. Before we get started this morning, I just wanted to talk to you all, whether you're a bull or bear, about how to be on a basic level, how to be a basic or a good trader. And it mostly has to do with trends. Generally speaking, our market goes up, but this relates to whether our market goes up or down, okay? What I want to talk to you about is this, is that you all know in the past that when you use methods like Elliott wave theory, or you're using previous highs, previous lows to look for areas of resistance or support, whether we're moving up or down, you know that our markets can trade irrationally for extended periods of time. Mostly that's on the upside, but it could do the same thing on the downside as well. So oftentimes I'll see people say, well, I called the top or I called the bottom. And it's tough to do that because even if you do call the top or the bottom, let's say you call a top, right? Now let's say we look, I want to show you real quick, take you somewhere, okay? I want to show you this high over here. I'm going to delete this here. And you see this high right here, 473.53 was a high. So when we were here, if you said, well, I called that top, I'm going to assume that you probably called this top and this top. I don't know, this top and this top, but you probably didn't. And if you look on a 6-month or a year chart, that's 6 months, that's a year. I'm going to assume that you called all of these as well, which we know that you didn't. And this is where traders lose money on both sides, bull and bear. So you try to play what's in front of you the entire time in case we become irrational. And there have been many moments of this. As a matter of fact, this move right down here to here was an irrational move. And so you have to play those moves until they stop playing for you, right? So on the way up, you're looking for some sort of, follow my cursor here, you're looking for confirmation that we're heading down. And the same thing was even up here at 473. You need confirmation. It's not just that first dip. You need confirmation. And that is where we are in the inverse right now in the market. We've confirmed that we were heading down, and we're starting to show a reversal. But we still need confirmation to take long, like 1 month, 2 month, 3 month longs. And we're going to talk about that in the rest of this video. But it's important for you as a trader and an investor. An investor has different criteria. An investor has different criteria for who to invest in, when to invest in those companies. And those are usually more defined. Seasonality does, to an extent, work for investors. You have seasonality for tech. You have seasonality for consumables. You just have seasonality if you're going long 1, 3, 4, 5 years. You even have seasonality in just charts in a company that you can check as well. You start to backtest these theories back and forth on companies, right? How long has a company been going up for an entire year, right? Does it need to cool off a little bit? Has the stock been down since February of this year, bleeding off for an entire year? Are they ready to make another move up? So investors have their own criteria. You've got swing traders that have their own criteria. And then you've got traders, right? So as a trader, to me, it doesn't matter if the market goes up or goes down. But at the same time, if I was calling tops along this entire way and started to go short, I would lose my shirt, right? I would be out of a job. I'd be selling subscriptions on social media, which is more than likely what happens to most people that trade like this. So So my point to you, though, is this: it doesn't matter if as a trader, it doesn't matter if we're heading up, if we're heading down. It doesn't matter if it's extended, and you can play both sides as a bull and a bear. Okay, and if you're not comfortable with that, you can always just step back from the market until it's ready for your style of trading. So understand that as we move forward as well. So let's say, hey, I'm only a bull in tech. I only trade Apple. You can check Apple's charts, see the weakest times of the year, and then start making and take the rest of the year off, right? Same goes for the SPY in a 1 year. I've talked to you many, many times in the past. When we come into these bottoms, you can safely, until we start to make something different, right? So if you're looking on a year chart here, you can start to see, have we broken through, I'll put this up right now for you as a matter of fact, right? So you've got this is 11. This is 11. So we're in the 12th. We're in December, right? So you can take this support line, and you can still see that our market's in a bullish context. So you know that you can buy this still, or from previous history, and continue to go long. So depending on what your time frame is, right? So just it's an important note for you as a trader and as an investor, as a swing trader, to realize that you have to be able to look for the signs that we're rolling over or the signs that we're turning back up. You need to know how much risk you can put on. And if you need to be switching to bear or bull, and then you need to know when is the trigger for you to take a long that's 1 to 3 months out, right? Or if you're a bear, like right now, we are turning up for all intent. Well, we're starting to show signs of turning up. So that means that if you're a bear, you put less risk on. Now, some people out there are going to say, you're just telling me this so that I'm not a bear. And that's just not the case, because I take shorts all the time. I buy puts all the time. I buy calls. I play both sides in this market. I'm a bull because 90% of the time we're going up. It's the only way that you can survive, for me, at least in this market. I guess if you're a bear, if you're only making trades only at critical times, or playing small moments in the market, yeah, you can get by as a bear. But for me, I've got, people in my life I got to take care of. I got 2 dogs, I got houses, all that shit. So for me, at least, I'm not here to tell you, don't be a bear today because, we're heading to the pits of hell or whatever, because I don't want you to take that stuff. I'm just saying, when the market's rolling over, I'll still play that market heading up until proven otherwise, right? And then when it's curling back up, that I'm going to play that market in that same method. And we're there right now. We're possibly at a bottom right now for this pullback. So, and that's what's important about where we are right now. So keep that in your mind as we move forward here. Bulls, you are not out of the woods in any way, shape, or form yet. And this could just be a relief. And I'm going to go through IWM and the RUT for that reason. I'm going to go through tech, and I'm also going to talk about the rotation that's been taking place. Some of the key things to be looking at for why we could be turning up, why we're not going to go to the depths of hell today. We'll get into that right now, okay? So number one, the calendar for this week, right? Economic calendar. We don't have a heck of a lot. At 3 o'clock, we've got Jay Powell. I want to talk about Jay Powell in the news too. The news has been unreliable lately. It might become more reliable as we start to move forward at this point. I do like to trade the news, but even when news is out, you have to understand why it's being used. You have to understand why it's relevant for that moment, even if it really isn't relevant. If you're like, well, we know that's not relevant, but why is it relevant right now, right? Which is, they're trying to give you signals that we're going somewhere for that reason. And then also remember that they get bad news out first, then they bring out good news later, okay, with news. So this week, we don't have a lot on the economic calendar. We've got a lot of, we got Powell and Yellen on Tuesday. We've got ADP monthly report, but this is the monthly change. This is when they doctor stuff up. We got claims on Thursday. We've got continuing claims on Thursday, 8:30. But those numbers shouldn't be anything ugly. Well, you know what? CPI can be tough. So we've got CPI. That's probably the toughest thing we have heading into the rest of the week on the calendar. So that's known events taking place this week. Someone talked about the FOMC coming up. I don't think that is anything that's going to take place I don't think that's anything that's going to get dumped on us right now. I think you're going to start to see from this point forward, you're going to see big players start to wind down their operations for the holiday season. You can disagree with this or not, or you can do whatever you want, but most of the market's going to start to slow down at this point heading into the new year. Most of the tough stuff is done at this point, and they'll get right back at it, though. The moment we get back from January 1st, trust me, it'll be, hell on wheels, guaranteed. Well, not guaranteed, but most years, a lot of you bears out there like to say, well, seasonally doesn't really count. But I guarantee if you're a bear, you'll be talking about the seasonal downward movements for us when we come into January through March, right? So seasonally, tend to trust those to some extent. So we'll deal with that as we head into January, February, March. And for all you investors out there that we talked about earlier in the end of summer, early fall, we talked about you pulling your long-term investments out, right? And we can see right now that that has worked out for us. So hopefully you stayed cash gang. You only played like we talked about, playing this market day in, week out, month out, and you should be safe. If you've followed any of my videos, at this point you should be cash rich. You should not be poor. This should have been a very good year. So congratulations to any of you out there that have followed me along the way, okay? So moving forward, we don't have a lot on the docket this week. So you're going to be looking for news, right? If we're at a specific volatility level, right, in the market, or resistance level in the market, you're also going to keep your ears open for bad news, or what news organizations are pushing as bad news. If you don't see that bad news coming in to your social media feeds, that means everything's okay, right? And that's a secondary or a thirdary causation for resistance levels to be respected, right? Those are the part of your tools in your toolbox that you're using at different support and resistance levels. And that goes for good news too. So anyways, we don't have a lot going on here for the news for this week. And we're going to talk about where we are right now with the SPY. We can come over to the 3-month here. This really doesn't matter. I want to show you this for a reason, okay? I was talking, and I have a handle called Captain's Alpha, and I was talking. I'm going to try to do a drawing here for you, talking about us possibly moving around in this area here until the puts are. We have a put expiration day on the 17th, very large. I think it's 6 or 8%. We have another one thereafter, I think on the 21st. I'll repost those. You might see us trade sideways until those puts expire, okay? And then we end up making a move higher to all-time highs again. Let's call it 480 up here. Now, don't use this as what's going to take place either, but this is probable or possible that we do something like this, okay? What you are looking for, though, as a trader and as an investor, or not an investor, but a swing trader, is this. You're going to be looking to buy these supports down here, right? 450, possibly as deep as 445. And you're going to long those until we hit this volatility zone above at 457 to 460. Now, if you want to be a successful trader, you buy these dips, right? And you sell out up here at 457, and you wait for 460 to 464. It's between 460 and 464 you can start to take long. As long as this zone holds, you can take this long to 478, possibly 480. Now, some of you want to put more risk on. You're like, I bought the dip on Friday. I'm going to hold these until we go to 478. That's fine for you if you take on that risk. Myself, I usually take risk to here. If we break through, I'll take on more risk, and I'll, through stages, make my way up through to 478 or 480, and then begin to take less risk on if we roll over, if we continue on and melt up into the new year, which typically we do this year. Typically we do in December, we'll melt up straight up to, sometimes it's right before Christmas, like the 24th, and sometimes it's directly to the 31st. And we have an expiration date on the 31st this year with no puts. So we've got that, right? Now for today, the play for today is that same thing. If you got in on Friday at this bottom down here, if it was me, I was cash gang, I would hold until we hit 457 in cash market. Now myself, I'm going to be looking for any dips that I can find this morning. So I'm going to be looking for this cash gap right down here. That's at 453.74. I believe that's where we closed. And I'm also going to be looking for the low. We've got this low right back here, right? So I'm going to be looking for 453.74 to go long. I'll be looking for 450.05 to go long, right? So this is what I'm looking for, not being in the market. If I was holding, I'd be looking to sell somewhere up in here. Now, there is one thing that happened in the overnight that's not shown in this chart, and that's when we hit 457 in the overnight, we didn't sell down to the pits of hell. And that is a nod or indicator. We did sell off, but we didn't sell to the pits of hell. And we have done that. If you look at previous charts, you can see here, right here, that we sold down heavy. You can see right here, we sold down heavy. And not doing that in the overnight is a tip of the cards to say we more than likely won't sell down to 445 today. It's probably off the table for today. They're likely. I would give it a 60 to 70% chance that we don't sell down to 445 at this point. It looks like liquidity is coming up. Now I'll check this thing called Bookmap today for you, and I'm on Spot Gamma as well. I'm going to talk to you about both of those today. But on Bookmap is what I use to track where liquidity is. Now we're still in a negative gamma environment until we break above 460 to 464. This is where we flip to positive gamma up in this area here. So I'm going to be looking to buy anything down here. I doubt we even get down here today. I think everybody kind of knows that we're heading up. So my expectation is, or my plan is this: if we green bar it right up here and don't sell off, I'm going to pick up a long right at this volatility level and head higher. If we bounce down below down here, I'll pick up longs here as well. Today's also a good chance for you to take some spreads, some risk on that are a month out, maybe to the end of December. The 31st would be good. A week after, 17th would be good. And there's some dates in January. I think I posted them. Now, from the bear case, the bears still don't believe that you're out of the woods here. And I tend to agree with that at this point. And I'm going to show you why in the NDX or Nasdaq and in small caps that we're not out of the woods. And it also lends some credence to why we will probably trade sideways coming into the next few days. We need to kill the VIX, and sideways movement does a better job of killing the VIX. If you wanted to short the VIX, and we wanted a safer play, you could short the VIX for the next few days, and before we make a run higher. You might see SPY kind of stagnate here, and some other indexes have some work to do. So we'll talk about that and why we may not go higher today, and why, though, it still might not be a bearish movement. This could just be day trader stuff the next few days, okay? And that's how you should treat it. And if you're a bear and you want to go short in this market heavy, if you see some resistance above here at 460 and you want to take this down at 457, that's fine. I would not be taking it down any lower than this 445 or 450. And if you start to see that we're breaking through these resistances today, this is a sign to you as a bear to not be taking shorts, because it could be a violent move up. All right. So I hope I've covered all the bases on this one today. We're going to look at NDX real quick, Nasdaq, and this is what I'm trying to talk to you about. Okay, is we're very close on vol. Usually you can swing 100, 300 points without any volatility in Nasdaq. Right now, the volatility triggers at 15,800. This one says 15,780, but it's 15,800. I could move that up a little bit, I guess. Right there. Okay, so 15,800 is where you're going to hit some volatility. If you are a bull, you want to be taking longs again to this point. You want to see what the reaction is. If it isn't a steep sell down, then you can start to take it long again to 1,600. Anything above 1,600 is going to flip to positive gamma, and that is going to skyrocket us up to 16,800, guaranteed. But I think that there's a lot of repair needed in NDX, and I think it's the tightest trading zone that we have in the market right now. So it wouldn't shock me to see Nasdaq bounce around in here. And this is where I want to make a key point. If you are long in stock in Nasdaq, there is some high risk that you'll see some stocks stay up or start to recover, and overvalued tech stocks continue to get whacked in the coming days. You saw that happen to DocuSign last week. I thought that to me was, and you saw PayPal, you saw PINs. You're starting to see some of these companies that have always gone up start to get whacked down. And that is good for bears and bulls to an extent. Take your profits is important. But then it also shows bulls that the market is trying to knock down some of these stocks because we're not going to have a market crash. Okay? Now I'm going to get into market crash territory here in just a second, because this is the scary one, okay? I'm going to show you IWM here on a much larger scale and show you how messy the chart looks. I mean, that's an ugly looking chart right there. And you know bears want to come down to 205 minimum, if not even deeper. In all honesty, if we saw 163, if we had a market crash, this is where it's going to take place. It'll take place in small caps. You'll see a sell down to this 163 number, and this is really what the bears are talking about down here. I don't like trading IWM on the daily. I do like looking at it from a weekly perspective or monthly perspective, and we broke through some serious key supports. When you see this chart looking different, I'm going to show you a different chart somewhere else. When you see this chart looking different, it's because see these two yellow lines right here? These are supports that we just ripped right through. And these are some more supports that we just ripped right through. And you see this volatility line above here? This is where, this volatility line right here, right? This is where there is huge, massive put resistance to small caps going up, okay? So anything at that 225 to 226 level is hard resistance. When you start to look at the IWM and the weekly too, you're going to see some major resistance at this 218 level. So this is where the danger zone is. This is where I made a note on Twitter, I think a week ago, where I said of all the indexes, the biggest put wall was put on IWM. It was scary dangerous, the put wall that was put on there. This is where the pin is for the market. This is where the pin is from us stopping to go up in Nasdaq. This is the pin for SPY going up. This leads me to believe that there's a couple things going on. One, you're going to see huge squeezes in IWM. You're going to see huge moves. This is where a lot of money is going to be. And then it's also where the danger zone is, right? If we start to break below this 213 down here, if you start to see the support wane over here, this will kill our market, guaranteed. Now, seeing where we were down here, also, you know the Fed knows this. You know the Fed is looking at this and saying, well, if we break through this zone here, we're going to crash the market. They know this. So you're going to see the Fed use their quote-unquote tools to stop this from happening here. So what does that mean? Does that mean we just trade up until we hit this massive wall of volatility, trade back down in here, and we kind of have a stabilized market for some time until we get into the first of the year so that we can have our seasonally downtime? We can drop the market and use it as an excuse. I think that's on the table, especially for bears. We're still in that construct right now. That would be probable. It would give the holiday rally to the SPY, just as much as needed. It doesn't allow the IWM to head to all-time highs again, which if that put wall wasn't there, absolutely would be going there right now. So we need to find out where the put expirations are for the IWM. We need to see or track to see if more hedging is put in place and more shorts and puts are put on the IWM. This is an important thing to be looking at as we move forward. I'm going to show you that over here as well. And you're going to see, I get these lines from Spot Gamma. You guys had some questions about this. Bookmark will give you liquidity levels, but you can get liquidity levels on all kinds of other charting software. You can use TradingView. I use them sometimes. Thinkorswim's got some pretty good volume profile stuff. And then I went to TradingView, and now I use Bookmark. But find one that's free or close to free. I think Thinkorswim and TradingView are the two closest to free that you can use. You can hammer down real deep into liquidity on Bookmark and a few others. I don't know the names of all of them. Then I use Spot Gamma. I use Flow Algo right now for my flow software for options flow. I get dark pool off Spot Gamma. And then I use a couple different Discords that I use for my information. I use Twitter for my information. I use News Squawk for my news. These are all expensive. I think News Squawk costs me like $300 a month or something like that. In total, I probably spend $1,000 a month in resources. I spend a lot of money. You don't have to, but I don't know what to say to you on that. I don't like to recommend to use these things either, because you'll never find me putting referral links up for you guys to sign up so I make stock money, that kind of stuff. You won't get that from me. If I ever need, I might put up, at some point I might put up a tip jar or something. If you guys, I have had people contact me in DMs saying that they want to pay me. I don't want to be paid. I'm not right now at least. But also another guy out there on Twitter told me to put a tip jar out. So if you guys make money off my plays, that'd be great. I pay a lot of money for the stuff that I do, for the trading that I do every month. That stuff does cost me money. And if you guys don't tip jar me, that's fine. What I do appreciate though is if you like my videos, if you subscribe. I like the interaction. I don't like the trolls, man. Like if you're a troll, if you want to be snarky, that's cool. But if you're gonna troll me, insta ban. I used to not ban anybody, but I'm past that now. It doesn't help anybody make money. And that's in reality what we're all here for. We're all here to make money. Now, as far as my trading style goes, sometimes I put on complex spreads, but I keep my spreads simple. I use Options AI to work out the end mechanics in them, so that I can have usually when I'm putting spreads on, I plan them. Like let's say today or the past week or so I've been looking to put some spreads on. I'll start to get a gist of what I want to put on, but oftentimes there are key moments where I should be putting them on for max gains. So I'll use Options.ai for a dirty and quick way to see how to put on a simple spread. Complex spreads, I don't use them as much as I used to. I used to overthink my trading. I don't like overthinking my trading any longer. I'm kind of over that now. That was something from years ago that I did. When I overcomplicated my trading, I tended to not make as much money. And then also, I don't trade futures anymore because I'm already awake 24 hours a day looking at this stuff. When I was trading 24 hours a day, I was over trading. So just for me out there, I know some of you guys love trading futures. For me, you can just use what I put out there to help you in what you're doing in futures. But for me, I try to keep my trading very simple. I try very, very, very simple. When I've started to make my trading simpler, like if I know for me what works and what doesn't, I tend to stick to that because I make more money that way. I'm able to stay not having a job. And I think a lot of you guys out there don't want to have jobs. That's my assumption, right? You guys don't want to work. Or if you want to work, you should. Like I volunteer at this local ranch, and I love it, right? So I don't have to work. I spend time with you guys, right? And I get to ski, hike, bike. I get to take vacation whenever I want. Get to go places. So I'm thinking that that's what you people out there want to be doing as well. So anyways, that's where this stuff comes from. I use this in conjunction. Initially in the morning when I get this stuff, I start to look for these zones right here, and then I start to use traditional methods. I start to look for pennants, believe it or not. I start to look for previous lows, swing highs, and I get rid of this stuff here, and I start to chart in for my day, just like I showed you with this SPY chart. I start to put some lines in for previous support and resistance zones. I'm looking for something previous down here. I can see it's right here. I can see there's one right here. So I'm going to bring it right back up slightly higher so that I can be alerted before we get there, or in case we get. I'm going to start to look for previous highs. I'm going to start to look for some minor highs a couple days before. And you guys should be looking for the same stuff. Now, if this stuff gists with everything else that's going on, right? Sentiment, market news, and some of this volatility stuff, right? Some of the where the liquidity is. If it all starts to make sense, I can put together a trading plan for my day, my week, my month. Does it mean that it's going to work 9 times out of 10? No. But if it works 7 times out of 10, just 7, I'm making bank. And so that's what I hope that you can get, a point that you can get to in your trading. You don't always have to be right, but if you're right 7 times, just 7. If you're right just 7 times out of 10, you're going to be successful. And when anyone out there's yelling at you or trolling you or whatever, it doesn't really matter what they're saying, because the only thing that it matters to is you. It only matters that you're making money, okay? It doesn't matter what bulls and bears are saying to you, making fun of you, making fun of bears, making fun of bulls. The only thing that matters to you at the end of the day is that you have about a 70% win rate. If you have 60, you're doing all right. If you have 70, it's like baseball. You're batting like a 300. If you start making 8 9s every now and again, you're batting like 400. You're a Hall of Famer. Okay, so keep that in mind as we move forward. As I get to know you guys get to know me, and we'll talk more about that. So that's what the end result is here. And so when I post things for you on Twitter, sometimes I'll just show you a pennant. That ain't just some pennant. That's what I'm looking at before we get to that pennant. Why am I putting a pennant up on Twitter? Why do those pennants seem to work out? Sometimes I go on Twitter and I'll put a pennant up that looks bullish, and I'll make a note on it saying, this looks bullish, but it's not. And that's just to key you into the fact that sometimes bearish setups look bearish, but they're bullish. Sometimes bullish setups look bullish, but they're bearish because of all the back stuff, the work that's done before that we get there. Okay? So I don't know, that's all I got for you this morning. So that's what I'm looking for. I was cash gang, so I'm cash gang. What am I looking for? I'm looking for a bounce off 453.74. I'm looking for another bounce deeper off 450, believe it or not. I don't think we get on at 445. You got to have some real bad news coming out today for us to go to 445. And it'll be telegraphed if it does. Now, what I do expect we're going to do, it's going to be a big giant green bar up here to 457. Probably sell right back down to this 453.78. And then we're going to start to test above. I think we're going to start testing this. We'll sell off until we can break through heading into the 17th of December. Now, if we break above here, I'll get ultra bull with all of you, okay? If you're a bear, it's the same old, it's the exact inverse of what I just said. You're going to be looking to take shorts briefly and same thing down below. If we start whacking off the bottom down here, that's telling you that we're going up, right? Same thing with going above. We're going to make one try, two tries, third try we'll probably get above. So we are probably range bound next few days, lots of money to be made. If we do just rip through the top up here, that's possible as well. If we go way, way higher up here, you should expect some sort of sideways to down movement. And then we'll get more buyers to come into the market, and we'll start making our way up to 478. Good luck today. Check me out on Twitter. And whenever we're at a crucial pivot point, I play this market every day of the week. I'm taking a trip at the end of the year. I take it every year, but I do trade when I'm away during that time period. Some of you guys saw the video that I posted that showed my setup. That's my traveling setup. I have, I think, 4 screens and a banging rig that I can put in a backpack and fly anywhere I want. And I'm ready to go. I don't know what I'm going to do with my microphone this year because it's huge. My small microphones kind of suck, and this one kind of sucks too. I have to get a better microphone. But I will talk to you out there today on the floor, okay? Later, bros. And I don't know, what do you say? Later, have a great day, ladies. Have a great day, guys.